Hi everyone, I'm Matt from Look Into Bitcoin, and today we're going to be doing a Bitcoin roundup to discuss the current market conditions. We're going to try and gain some insight into Bitcoin's recent volatile price action and how we should consider positioning ourselves going forward. To do this, we'll be using a number of resources, all freely available on lookintobitcoin.com, your number one source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now we're just on the TradingView Bitcoin chart, and as we can see, November has been not a great month for the Bitcoin price. We've had a fairly substantial decrease in price following the fallout of the FTX situation and their insolvency. So if you weren't already aware, which I'd be surprised if you weren't, especially if you're involved in any kind of crypto social media or watch any of the YouTube channels, but FTX, one of the Bitcoin's largest exchanges, one of cryptocurrency's biggest exchanges in the world, actually were insolvent, and user funds on the platform have unfortunately been lost seemingly. So that has obviously had a very negative reaction on price. And we can see just the price reaction immediately following that event, price dipped around 30% nearly. So a fairly substantial decrease in price, especially as that price action almost broke the floor we had built at 20k, as a lot of support and a lot of people were accumulating around the area. Now we've actually dipped down to lows of sub 16k, so a very stark decrease in Bitcoin's price. So now let's look at some on-chain data to try and figure out how we should position ourselves going forward. So right now we're just on the price forecast tools chart, and we actually did a video about this a few weeks ago looking at specifically two of the lines involved in this price forecast tools, and that is the CVDD, the cumulative value of coin days destroyed, and the balance price. Now both of these are very good at predicting Bitcoin price bottoms, and if we just isolate them on the chart here, we can actually see in every single one of Bitcoin's bear market, these have provided the absolute bottom price and the support as we kind of accumulated and got prepared for the next bull cycle. And right now we are currently at these prices. If we zoom in a little bit now, we can see the CVDD is currently at around $17,000 and the balance price at about $15,000. Now these are both taken into account actual network utilizational values of Bitcoin, taking into account not only the time a Bitcoin has been held in a wallet before it is transacted, but also the amount of Bitcoin being moved at any given moment. If you want a little bit more info on how these are actually calculated, I'd suggest watching our previous video or even the chart explainer video we've done, or on the Look Into Bitcoin site. You can actually just come into here, scroll down a little bit, and it gives you all the maths behind everything. But as we can see, this historically has been a great area to accumulate Bitcoin. Will this be the case this time? We'll have to wait and see, of course. Given Bitcoin's bearish price action, a lot of people are very hesitant to even accumulate at these levels, but historically speaking, this is never a bad area to consider buying some more. Next, if we look at the PUL multiple, which is looking at the current miner earnings compared to a yearly average, we can see that their earnings are down substantially. And this usually indicates, again, a market bottom. As we get this miner capitulation, as the earnings of miners have reduced substantially compared to the historical norm, we enter this green buy territory, which we're currently sitting in now. And similarly to the price forecast tools, anytime anyone has historically dollar cost averaged in during these times have been a very good entry point going forward. Strategic investors who are happy to dollar cost average into their positions right now and are happy to hold for a few months, even a few years onto their positions, usually are rewarded nicely. So obviously this isn't the time to just invest all of your capital at once. It's better to try and drip feed money slowly and accumulate while prices are seemingly quite low. But we always have more room to the downside, unfortunately, depending on other fundamental factors. If any other crypto exchanges, unfortunately, turn out to be insolvent, or any other fundamental events that affect global markets in general, that can always lead to negative reactions in Bitcoin's price. So as discussed, drip feeding in, slowly dollar cost averaging, and only risking as much as you can afford to lose is the best way to go about it. But now does seem to be a sensible time to consider drip feeding into your portfolio. Next, we can look at the hash ribbons indicator, and as this links into the PUL multiple and we're seeing a lot of miner capitulation, we can actually see the most recent hash ribbon buy signal we got, which occurred in late August, actually didn't result in a positive reaction in price. And this is the first time in Bitcoin's price history where we haven't had at least some upside following this hash ribbon buy signal. And we can see now, if we just zoom in a little bit, we are soon seemingly going to get one of these crosses of the 30-day and the 60-day hash rate moving average, and this will give us these orange and eventually green and hopefully white buy signals. But right now this is indicating that potentially miners are capitulating, not putting enough resources into the market, and are potentially unprofitable. And as we see miners shut off their equipment, this usually leads to a negative reaction in Bitcoin's price. And finally, the realized price, which is the cost basis of all Bitcoins that have been transacted on the network. This is almost a fair value of Bitcoin, or the network utilization value. If we actually take into account the last price that each Bitcoin was moved on the network from any one wallet to any other wallet, and then we aggregate and average all of that data out, we get the realized price. And if we zoom in a little bit, we can see the realized price is currently sitting around $20,000, which means a majority of Bitcoins were actually last transacted at a higher value than we currently are. Now, these occurrences are actually pretty rare throughout Bitcoin's price history, and we can see actually by looking at the realized price and seeing that this value is decreasing, that people are actually buying Bitcoins right now. Because if the realized price is decreasing as prices beneath the realized line, then the cost basis for Bitcoin is decreasing. This must mean that people are accumulating at lower prices than the current realized price. So if we just zoom out again, we can see in every single one of Bitcoin's bear markets, whenever we dipped beneath this realized price, it actually turned out to be a great entry point again. So this doesn't necessarily mean that right now is the absolute bottom in Bitcoin's price. In each single one of these circumstances, once we actually cross below the realized price, we usually spend a few weeks, even a few months, majority of a year in some cases, beneath this realized price. So right now doesn't necessarily mean that we have bottomed in price. All it means is that we are likely pretty close if we're looking at the historic average. So just to summarize, unforeseen fundamental events can often have seemingly catastrophic impacts on the Bitcoin price, and the recent FTX occurrence is no different. We've seen Bitcoin drop nearly 30% following the news that came out, and has now failed to regain its previous support that it had at about $20,000. And right now we're chopping sideways, I think waiting for investors to gain at least a little bit more confidence before investing a lot more money, and we see Bitcoin start to actually climb up again. And a lot are very hesitant with the occurrence. A lot of unfortunately lost a lot of money due to the FTX situation. So again, are probably hesitant to invest right now in fears that we could go even lower. What this really shows us though is managing your risk is crucial at all times. It's never the best idea to have all of your funds on any one exchange at any given time. You may have heard the phrase before, not your keys, not your coins, but times like this really emphasize how much self-custody of your own cryptocurrencies is crucial. However, in spite of all of this, we can see many investors are actually trying to seize the opportunity provided by the recent events and are continuing to accumulate Bitcoin at historically oversold levels. If you're seeing Bitcoin right now as at a discount, then it doesn't necessarily matter what the price action is going to do in the following weeks and months, because you can understand that probably in the next market cycle, Bitcoin is going to reach substantially higher prices than it ever has before. So right now, accumulating the difference between $16,000 and $15,000 probably isn't that massive to a lot of strategic investors. And of course, every cloud does have a silver lining. After the fallout of the FTX collapse, hopefully now the market can grow and mature even further. Hopefully we see exchanges providing proof of reserves to prevent anything like this happening ever again. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live chats, in-depth newsletters, indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. Here I've just got an example of the most recent newsletter we sent out from Look Into Bitcoin, going over many of the things we've discussed here today and even more. And right now, Look Into Bitcoin actually has a 40% Black Friday discount offer, so I definitely recommend consider being a site subscriber right now just to try and save a little bit of extra cash. Thank you very much for watching, and I'll see you in the next one.